Well, good afternoon. Welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Samantha Loring, my co-host, as per usual, Mark Ashton, editor of Finweek. Coming up in the show today, we'll take a look at why South Africa should love Sanral, Gautengers in particular. We'll then take a look at the practicality of setting up an investment club. And on the management front, there's an ongoing war in seeking talent. We take a look at how you should spot talent within an organization. And finally, we try to solve the entrepreneur's dilemma, venture capital or private equity. Please remember that you can send us any comments or feedback to moneymatters@abn360.com. Well, just when Gautengers thought that the e-toll battle was behind them, the courts have controversially overturned the original ruling, which puts them back on the table. Now, while commuters may feel that they've been taxed to death and tolls are just one step too far, the cover story from Finweek suggests that Sanral may not be the villain they're made out to be. With government not spending on South African roads and not much of the existing infrastructure, it may just make sense for Sanral to play a bigger part in the South African road story. Joining us now at the desk for more, Finweek journalist Jessica Hubbard and the DA's Shadow Transport Minister Ian Ollis. Thanks for joining us today, Mark. Let's start off with you as always. A great cover. Talk to us about why you've chosen to take this particular stance.
Well, I have to be honest, it was quite a controversial discussion internally. I mean, I think if you think about Sanral, we often just, your hackles are up. As a consumer, your hackles are immediately up. I think we all really celebrated when Sanral essentially lost its battle for the e-toll, the original battle for the e-tolls. But I think looking at what James unpacked in the story this week, they actually do have a role to play. And I think when you take the emotive side out of it from the consumer and you sit there and you think, well, what is the role of managing South African road infrastructure? I think it is very, very important that we look at this organisation that is effectively doing it very, very well. And I think maybe we'll put some questions to Ian shortly, but I think some of the interesting things that came out of this was that government departments are still underspending on road infrastructure, huge backlog sitting there, a large number of the gravel roads are essentially falling apart. And I think what's very interesting for me was James touches on the issue that originally our road infrastructure was set up to accommodate 4 million consumers or passengers essentially. Now essentially you've got the cities that are trying to be connected.
Post-apartheid, obviously.
Post-apartheid, you've now got 50 million people trying to use infrastructure that was maybe set up for 4 million people. And I think you've got to, it's a fundamental discussion that needs to be take place in South Africa. And I mean, I come from the airport quite often and you see the Gautrain and you see it packed up. South African consumers want really good transport, and they will use it once it's a proven concept. And I think that this is for me quite an interesting thing. How does South Africa change from being a very lumpy car-driven type of society, at least in the middle class, to something that engages and uses real public transport? And I think good public transport effectively impacts us as retail or consumers. It impacts cost of doing business. I mean, we know that we're not the most productive or successful society when it comes to managing and moving goods around. You think about our ports, for instance. I mean, one of the big problems there is we actually just can't move stuff through them fast enough. So transport is such an interesting topic, and I think what James has done here is suddenly he's taken one of those quite controversial views, he's turned it around and he said, look at it from another perspective. And
Ian, let's bring you into the conversation because Sanral, of course, is a private sector body that has been set up by the public sector, and the issue here is that you've got legacy issues as a result of the apartheid era, and then you've got a government right now that is not delivering on many fronts, and the transport infrastructure is just one of them. So where do you stand with regards to Sanral right now?
Well, look, Sanral is very good at project managing large projects, and I would compliment them. In fact, I think Nazir Alli does a great job of project managing. The problem with the e-toll and Sanral has been that the politicians that are supposed to present these projects to the public and manage the public participation process have abdicated that responsibility back to Sanral and said, no, Sanral, you deal with it. Now, Sanral are a group of engineers and project managers. They're not public relations people. And when you make engineers responsible for dealing with the public and explaining to the public what's going on, it really goes awry very quickly. And that's been the big problem here with the e-toll, is that the way the public was informed what's going to happen was extremely badly handled, but it's a political problem. Politicians like the MEC for Transport in Gauteng and the Minister of Transport.
That's why he fell. It's Boon Ndebele, you know, he's no more.
Well, that's exactly one of the reasons why he fell. You've got former and current Transport Minister, former and current MEC for Transport in Gauteng, who have abdicated that responsibility to officials. You can't do that as a politician. You need to be a leader. You need to be out in the front. You need to be saying to the public, this is what's happening the whole way through the process. It never happened, and the public found out too late that the process was botched. The problem is not with the implementing body, Sanral. The problem is with the politicians who ran away and hid and said it was somebody else's problem and never came up right to the front and said to the public, this is what it's going to cost you per kilometre, per day, per month, etc. And the public found out kind of later really what the financial implications are. That's a political problem, and it was really badly managed.
Yeah, maybe if I can jump in here. I mean, if you talking about it as a leadership issue, I mean, do you think much of it has been driven by ANC policy conference coming up this year? Nobody wants to be seen as the bad guy in this. They're essentially saying, I'll go with public sentiment for it, and I'll kind of play the card that I know what I actually want to achieve in terms of our transport infrastructure, but I'd rather go with the populist vote at the moment?
You know, that point was made in a way by journalists saying that it was a poison chalice given to the Deputy President to now solve the problem in the year when he may be challenging the President for the leadership of the ANC. So there is some political positioning going on clearly, and I think I agree to an extent with journalists who are saying you hand the Deputy President this difficult problem to solve just before the Mangaung province conference. It makes it difficult for him to come out looking like the good guy. Gauteng motorists are very upset about the e-toll, and in our view as the DA, the e-toll should not be implemented.
Okay, so let's take a look at other options, because it's not done and dusted. We still got that High Court ruling in November.
Yes.
Jessica, your views on this, the other options that we've got, because Nazir Alli last year said that the backlog when it comes to road maintenance will cost the country around 149 billion rand. That's a lot of money. So of course you've got the e-tolling as one option, then you've also got ring fencing, a fuel levy. What are your thoughts on those other options?
I think, for one, the public does need to accept that they're going to have to pay in some way for the improvement of the roads if they want the roads to be maintained. So there is a cost involved, and as Ian was pointing out, that cost does need to be communicated more clearly. So there's a big part for communication, and I would agree with James that ring fencing the fuel levy is a good option. It just needs to be unpacked for the public and explained in the right way. It can't just be dumped on the public and sort of shocked and awed, you know. It needs to be a process of educating the public, showing them this is what is going to be done and this is why it needs to be done. And I think you'll find more public acceptance of the whole concept that way.
What do you think about that?
Yeah, absolutely. Our policy position is that instead of an e-toll, what we should have is long-term ring fencing of all the fuel levies. In the Finweek article, it talks about over 40 billion rand per year that is taken from the public through fuel levies. Now, what happens to that 46 billion rand? It goes into the central pot and can be spent, for example, on bailing out SAA when they get into trouble and need another 6 billion bailout, for example. We think that is exactly, Danelle, we think that's shocking. What you should do is take the money from the public through the fuel levy, yes, because you have to pay for it somehow, then ring fence it and spend it on the roads.
Can we ring fence? I mean, can we trust the system though?
Well, you can't trust the system now because the money now goes into the pot.
If they do say they're ring fencing, what are your thoughts on that, Mark?
Yeah, I mean, I think this is where accountability comes in. Accountability and leadership, because, I mean, I think when you have the situation where everybody's passing the buck and you're saying, I don't want to actually be responsible for a project, and I think it's exactly to the point Ian made right at the start, is that you have project managers. Project managers, normally good project managers, will execute the projects. It's a case of saying, I need some leadership to be able to take this project. I want to be held accountable for it. I want a deliverable. You know, we can often say, well, the car train kind of had some moving targets along the way, but at the end of the day, there was a deliverable to it. I think the other thing that hasn't been touched on so much is kind of this politicking around, like the taxis, for instance. You've got the situation where you say, all right, well, everybody pays except so and so. or and I think that was one of the things that really irked consumers in general. Was fine, we're all in for we all agree we need a proper working public transport system, but you can't say that my spend on the road is different from somebody else's. There's got to be a balance there, and I think that that's one of the things, again, with the politicking, where communication and an understanding of the project from start to finish needs to be improved.
And you also talk about, if we had to talk about the taxi system, how they actually are such an obstacle to improving infrastructure. They really stand in the way of, the rapid road transport system here in Joburg, here in Gauteng.
100%. And I think if we can get buy-in from all parties, and I think, often Nazir Alli was quoted in the press trying to get this point across that cheaper transport infrastructure would ultimately benefit everybody. But I think, often being, essentially he was screwed over when people said to him, it doesn't apply to these people because we're looking for certain votes around it. And I think that that's got to be one of those issues that does need to be addressed, is if we're going to push ahead with it, understand it and communicate it from beginning to end and give us the deliverables.
So it's a good thing that Nazir Alli perhaps is back in the organisation. And do you think that we should change our attitude towards Sanral, perhaps give them the benefit of the doubt and just change the system?
I do think we need to take a gentler view towards Sanral, but also if we look internationally, we're quite spoilt in South Africa in that we haven't had to pay huge tolls and we don't have to pay big fees for our roads. So I'd just like to put it to Ian and say, how would you compare what we pay locally to what foreign people do overseas for their roads?
It's a very important question, because people are saying in the media quite often, and government officials, economists and private commentators are saying that it's not that expensive compared with Canada or Australia, where there's an e-toll system in place. That's not quite the truth in a sense, because if you, for example, take home 6,000 Rand a month and you work at a supermarket, and the e-toll system is implemented, and you drive your little second-hand car to work at the local Checkers or Pick n Pay store or whatever it is, you could lose 550 Rand a month of that 6,000 Rand salary to e-tolls. Now that's a lot of money for somebody earning 6,000 Rand. So the rate per kilometre in Rand terms might not be excessively expensive compared with Canada and Australia. But when you look at the salaries that South Africans are earning, we've got the fights at the moment with all the strikes going on because people feel they don't earn enough.
And we talked about the cost of living here last week.
Exactly, and the point is exactly that, is that if you only earn, say, 6,000 Rand a month, 550 Rand a month is actually quite a lot of your salary to spend. Remember, you're still paying the fuel levy. You're paying for your fuel, you're paying the fuel levy, you're paying your car license, you're paying all these other costs, including the cost of the second-hand car and your insurance, which is through the roof. Plus, you now add on another 550 Rand a month. Big chunk of your salary goes on transport. So
we've got to wrap this up, but just before we go, very quickly, do you think that Sanral should have more oversight over more of the roads in South Africa?
I think that the provincial departments have got to get their act together. The Eastern Cape handed 2,000 and something kilometres of roads to Sanral and said, you fix it, but with no money. Sanral can't take unfunded mandates. The provincial departments have got to put proper project managers in place who are qualified and who can repair the roads like the R56 in the Eastern Cape, which is a total disaster. You can't just keep saying to Sanral, oh, you come and fix it. Eventually Sanral will run the whole country. That's ridiculous. You've got to put project managers in every province so that they can actually deliver on the roads.
Thank you very much for joining us today, Ian Allis, the DA Shadow Minister. Time now for a quick look at the Finweek Trade of the Week. Well, this week's Trade of the Week, Sasol, Brent crude 113. Where's the Sasol share price right now?
That's interesting. I mean, Sasol's, I was actually looking at it just before I came through. So Sasol's about 368 today. Last time Sasol was above 400 was back in, I think, April 2011. So it's kind of flirted with that sort of 360 to 400 range for a while now. Results came out and it was quite well received by the market. Short-term spike. I think they've been plastered a little bit with the broader sentiment on the resources at the moment. You've seen a sell-off in the broader market. So I think that, you know, when I think it was trading about 390 before all the strike action happened. It's now back around 360 odd. I think Sasol's quite a nice play. It's a really good business, well run, very cash generative. dividend yield of about 4%, and you're sitting about 8 times earnings multiple. You know, there's two options there. One, if you're a long-term value investor, I think you probably do all right there. And I mean, the dividend will simply carry the cost, carries the cost for you. And for a trader, I think sort of looking at the 360 to 390 range, I think you can do quite nicely for yourself.
That's what people have been saying on the desk here at CNBC Africa. Time now to pay the bills. We'll be right back after this very quick break. Welcome back to Finweek Money Matters. Let's be honest, investing is scary. The stock market, with all its numbers, often means that people won't get involved and miss out on good opportunities to make money. Now, one of the great ways to get involved and to have a bit of fun investing is through an investment club. Joining us now to take a look at the practicalities of these, Amelia Morgenrud, the portfolio manager at PSG Consult. Amelia, thank you for joining us today. So, are investment clubs the new poker clubs or the new book clubs, or is there a little bit more to it than that?
I think there's a little bit more to that. The problem is in South Africa, there's no specific structure in place or no specific tax legislation in place to address investment clubs. So when you think of starting an investment club, it's not that easy. First of all, you can't register it somewhere. You can't. The only way to do it is like kind of form a partnership between the various parties involved.
And that's different to other countries, where there are systems.
So.
No, I mean, as far as I know, there's very limited real structures in which you can do it. I mean, you can put it into a CC, for instance, and you can try and do it, but it becomes expensive. I mean, we often all slate the portfolio management, the asset management industry for the cost, but I mean, realistically, the costs of doing a investment club, if you were to go the CC route, you need to have real assets, which kind of defeats the social aspect to a lot of it. I mean, and I think that often you need a constitution which effectively says how members are going to join, how do you accrue assets, how do you divide them up. But there's some very good success stories. I know Amelia's involved in a couple of them as well here in South Africa. But I mean, my wife was involved in one. I think it's a wine club more than an investment club. But but I mean, the reality was there was a group of teachers who got together and they said, look, we want to find out a little bit more about the markets. We want to talk a little bit about. We want to educate ourselves. We don't want to go and sit there and be actively watching the screens the whole time. But they want a way of getting in and put a couple $100 a month. They have a meeting once a quarter or once a month or whatever it is. They drink copious amounts of wine. But jokes aside.
And make the decisions after they've drunk the wine before.
But I mean, essentially the decision is you work your way around the room and you see, well, who's on what cell phone contract? Okay, well, 90% of the room's on Vodacom. Vodacom must therefore be a good share. Where are you shopping this week? It's Spar or whatever it is. They use a lot of common sense in terms of what they're investing in. And jokes aside, I mean, what they've found is that one, they do very well for themselves. They often outperform a lot of the professional asset managers.
So they're not sitting there with financial reports and everything. It's just common sense.
A lot of it is common sense. They'll try and get in a speaker where possible, but they do quite well for themselves. And I mean, that started from very humble beginnings, and I think it now 25,000 rand to buy a share in this investment club. So I mean, that becomes a very real investment in the long run. And what they've seen is, one, they've had fun, two, they've educated themselves, and three, they've seen the benefits of compounding.
Yeah, I suppose it's also about the scale, because you're all able to pool your money, and then that reduces the costs, and then you can invest larger sums of money.
Exactly, I'd say that's one of the key benefits of an investment club. It's just a cheaper way to invest. As Amelia pointed out, you can't buy shares for less than, I think it's about 10k per transaction.
Yes, more or less. Maybe some of the discount brokers you will be able. I would say between 5 and 10,000. Then it becomes sensible.
Minimum 5, they always say.
Minimum, I would say. Yes, depending on where you trade. And also, the thing is, if you on your own, if you don't have the means and enough money, you cannot diversify. So you can't buy lots of different companies. Like Mark said, it's very nice if you use your common sense and say, okay, you're on Vodacom, we're all on Vodacom, let's buy Vodacom. But that's not the only way to do it, and you can't just buy that one share. So that's another benefit if you pool the funds together, and you can do sensible transactions and diversify your portfolio, buy lots of different companies. And also, if you pull the funds together and also your knowledge together and talk about it around the table, you can make sensible decisions on your own. It might be very frightening, and you might be very scared.
And I think it's an excellent point, is because like you often talk to, I talk to people in my social circle and say, well, why don't you invest? It's scary. Go and get the collective of 5 people who say, okay, well, this is a common sense. I mean, this makes sense. If we lose something, all right, maybe we've risked something, but the reality is Vodacom's probably not going to disappear tomorrow. Group of them get together and they say, all right, together we made this decision to go and do something. And I think that removes a lot of the fear aspects. I mean, I think there's a social aspect to investing that we've missed out on in South Africa. I think that, stokvels are fantastically successful in South Africa. I mean, there's billions of rands sitting in stokvels in South Africa, and why do they manage to collect such big asset pool? It's because it's a community thing. It's a group of people agreeing for a single savings goal.
But you wonder, whether it is the substitute for professional advice. What are your thoughts on that? Because, if you have someone who doesn't know something about the markets and then you have 5 people who also don't know about the markets, is 5 people better than 1?
Well, I would say it's beneficial if you could have one of your group members being involved in the stock market, or has some experience of it, or maybe is involved in that sector or works in it. So it's always, you should choose your members well.
Choose your friends carefully. Have a clear selection criteria.
I think that's one of the main things about an investment club. The first thing that you should consider is whether all the members have the same vision or mission, or have the same goals. You can't have somebody who's not really committed and maybe invest this month and next month say they don't have the money, they can't bring it by. It's very important that all the members have the same goal and the same aim.
And a constitution which says what's going to happen. Because I think it's one thing to sit there and say, as a group of mates we decided, but then if I have a falling out with Jess or Amelia or whatever, and I suddenly want to pull my money, it's not, the practicalities of actually taking money out become quite a big one.
But they say money and friends should never mix. Exactly. This is where they are essentially mixing.
And that's where I think that you do need to try and work out exactly who it is. You've got to separate that. Yes, it might be good fun to sit around the table, but you have to have you have to have a set of rules that people buy into and they agree to. Because if you have 10 investors and 3 suddenly want to take their money out, it might, or they see the market falling and suddenly they want to get out. It impacts long-term performance as well. But it also creates a lot of an administrative nightmare, because let's say you have 10 shares in the portfolio as well, and suddenly they say, well, I want to sell 3 of those shares, and you can't decide which 3 to So, and that's why I think maybe one of the nice things that's coming through now is you get quite a lot of these ETF products that they lend themselves ideally to unit trusts, to investment clubs.
I'd just like to put a question to Amelia. What are the tax implications around these clubs?
That's a little bit vague. At the moment, look, there are 2 tax instances that you have to consider. The first is dividend tax, and the second is capital gains tax. Now, the first, dividend tax, luckily it's a withholding tax, so that's not a problem. At the moment, there's still, it's not very clear exactly how, because how it's going to work in future is that whenever the stockbroker pays over the tax to source, your tax number has to be attached to that payment. So in the instance of an investment club, there's no tax number for that account, because if you have 30 members whose tax number is on the account. So they're not exactly sure how it's going to be treated in future, but the withholding tax is paid. So now the second one is capital gains tax. How it should work is that the capital gain for each year should be divided between the members according to their stake in the investment club. That is how it should work, and they should add that, obviously, a part of that to their gross income. Like a normal partnership. That is how it usually works, because the partnership itself is not a tax entity.
But so then this isn't, the complications of there not being structures to register these kind of partnerships, as we're calling them.
It's very difficult, because somebody has to take a responsibility in the investment club for that. Somebody's got to go and sit down and do the calculation. Say if you have 30 or 40 members and each has a fraction of this investment club, and especially if they have different stakes in it, it becomes more complicated. So there must be somebody in the investment club who will take responsibility for that.
Yeah, and I think the structure is such important. There's some very nice initiatives now coming out. For instance, FNB, they've got a stokvel account, which actually lends itself quite well to multiple people putting money into from a structure perspective, you can put it in there. And in fact, I think you can even download a constitution from their website, if I remember. But
so you can use that constitution as a kind of basic
in which to work. So I think that I just listening to this and I was thinking SARS should maybe, if they're missing a trick here, because they should actually get out of, instead of taxing people on it, they should say, all right, well then incentivize people to join them. In the day, we've got such bad savings.
Set up a structure for investment clubs, and then you get more people investing more money out the system. Basically,
in the past, I've asked quite a few auditors their opinion about the tax, how an investment club should be taxed, and nobody is very sure about it. Some said to me it's regarded as a stokvel, which is not taxable. One auditor told me that it can be considered as a hobby, which is also not taxable, especially if you set up your goals saying that it's kind of a hobby or educational, and you're only contributing a small amount every month. I mean, how can that be taxable? So nobody's sure exactly how it should be treated.